If you think silver's rally is just another commodities bull market, you're looking at the wrong chart. Silver didn't surge 144% in 2025 from $30 to over $70 per ounce because investors suddenly discovered a passion for shiny metals. It's signaling a structural shift in the global monetary system, and almost no one is seeing it. While the S&P 500 closed 2025 in negative territory and most Americans were celebrating the good times in the economy, silver was pricing in an uncomfortable truth that few wanted to face. When a traditionally volatile asset like silver outperforms gold by 66% and crushes virtually every other traditional investment, we're not witnessing speculation. We're witnessing institutional fear. We're seeing central banks, sophisticated investors, and even governments positioning for a scenario most Americans can't imagine: the potential loss of dollar supremacy as the world's reserve currency. The truth is that silver isn't rising. The monetary system as we know it is declining. And if you understand historical cycles after years observing economic patterns, you know that moments like this aren't accidents. There are inevitable consequences of unsustainable policies that accumulate over decades. History is a relentless teacher, and it has shown us this movie before. In 1971, when Richard Nixon broke the Bretton Woods Agreement and disconnected the dollar from gold, many celebrated the flexibility this would give American monetary policy. What they didn't foresee was that this decision planted the seeds of every financial crisis we've lived through since then. During the 1970s, while politicians promised that the gold disconnect was temporary, silver skyrocketed from $140 to over $50 per ounce in January 1980. It wasn't the Hunt brothers' speculation that caused that rally. It was the recognition that a monetary system without real anchor eventually collapses under the weight of its own contradictions. The pattern repeats almost mathematically. Every time a dominant empire abuses its reserve currency, precious metals begin signaling the problem long before politicians admit one exists. In the Roman Empire, when they began reducing silver content in coins, the smartest merchants were already hoarding the old coins. In Weimar Germany, those who had the wisdom to exchange marks for gold in 1921 survived the hyperinflation that destroyed the German middle class. In recent Venezuela, even before the bolivar's total collapse, gold was already being used as parallel currency. Now, in January 2026, we're seeing disturbingly similar signs. The difference is that this time the country in question isn't a peripheral economy. It's the United States, the issuer of the world's reserve currency. And when we witness geopolitical tensions escalating globally in different regions, this signals that arrangements based on economic consensus are giving way to demonstrations of force. Historically, this transition always precedes changes in the international monetary system. To understand what silver is really telling us, you need to grasp three fundamental principles that govern all monetary systems throughout history. There's no free lunch in economics, no matter how much politicians like to pretend there is. When a country consistently spends more than it collects, as the United States has done for decades, that difference must be financed somehow. In 2025, the American fiscal deficit was $8 trillion, representing 5.9% of GDP. To put this in perspective, this percentage has only been exceeded during world wars, the Great Depression, and the 2020 to 2021 pandemic. Public debt now represents 99.8% of GDP, and projections indicate it will reach 106% by 2027. This means that soon the United States will owe more money than it produces in an entire year. When you understand that the American government spent over $970 billion just on debt interest in 2025, exceeding defense spending, you begin to see why silver is rising. Markets are pricing in a reality that politicians cannot publicly admit. A currency only has value as long as people believe it will have value in the future. This confidence rests on three pillars: political stability, fiscal discipline, and institutional credibility. In 2025, we saw worrying cracks in all three pillars. The Federal Reserve cut rates 3 times, even with inflation still at 8%, well above the 2% target. Internal divisions at the Fed reached the point where 3 members voted against the cuts, something that hadn't happened since 2019. President Trump himself came to publicly question Fed independence, firing Governor Lisa Cook and threatening to replace Jerome Powell. When a country's monetary authority becomes a political issue, confidence in the currency inevitably suffers. Every debt cycle follows the same progression. First, debt is productive and generates real growth. Then it becomes less productive but still manageable. Finally, it becomes unproductive and unsustainable. The United States has clearly entered the third phase when you need to borrow to pay interest on what you already owe. You're no longer investing in the future. You're just postponing the inevitable adjustment. The math is relentless. If your debt grows faster than your economy for long enough, you eventually reach a point where you can't even pay the interest. That's why silver is rising. It's not rising against the dollar. The dollar is falling against silver. Let me tell you a story that perfectly illustrates what's happening now. Imagine a country called Hypothetica that for decades was the world's dominant economic power. Hypothetica's currency, let's call it the hypo, is globally accepted as a store of value. For years, Hypothetica leveraged this privilege to spend much more than it collected. After all, when you can print the currency everyone wants, why worry about balanced budgets? At first, other countries were happy to accept hypos in exchange for their products. Hypothetica bought cars from Germany, electronics from Japan, textiles from China, all paid for with freshly printed hypos. But gradually, some smarter leaders began asking uncomfortable questions. Why are we sending our real products to Hypothetica in exchange for colored papers they print at no cost? What if they decide to print so many hypos that our reserves lose value? That's how the silent diversification began. First, some central banks started buying a bit more gold just to be safe. Then countries like China began quietly reducing their hypo reserves. In 2025, we saw data showing that India reduced its U.S. Treasury holdings by 6% while increasing its gold reserves by 5%. China has been the world's largest gold buyer for years. But silver is where the story gets interesting. Unlike gold, which is primarily a reserve asset, silver is simultaneously a precious metal and a crucial industrial input. It's essential for solar panels, electric vehicles, electronics, medical applications, and 5G technology. When China, one of the largest consumers of the industrial silver chain, imposes export restrictions as it did in 2025, it's effectively saying this resource is too strategic to sell for papers you print. Silver's supply deficit has lasted 6 consecutive years. Industrial demand keeps growing while production remains stagnant. And now with the United States officially designating silver as a critical mineral in 2025, even the American government admits this metal is fundamental to national security. Now, let's translate this to what really matters, how this affects you and your family. If you're a typical American with savings in dollars, retirement accounts invested in American stocks, and maybe a financed house, you're completely exposed to what I call reserve currency risk. This is the risk that your national currency loses its privileged status in the international monetary system. When this happens, and history shows it always happens, eventually the effects are devastating for the middle class. Let's look at 2025 numbers that made this situation clear. The American dollar fell 11% in the first half of 2025 against the basket of other currencies, the largest drop in over 50 years. Meanwhile, silver rose 144%. If you had $100 invested in the S&P 500 at the beginning of 2025, you ended the year with less money than you started. If you had the same amount invested in silver, you ended with more than $240,000. But don't be fooled into thinking this represents real gains. What really happened was that you preserved your purchasing power while those who held dollars saw their purchasing power silently confiscated by monetary inflation. If you're planning to retire in the next 10 to 20 years, you need to understand brutal math. With American debt growing faster than the economy and interest costs already exceeding defense spending, there are only 3 possible scenarios. Dramatic spending cuts, which is politically unlikely, massive tax increases, which would be devastating for the middle class, or monetary inflation to dilute the real value of debt. The third scenario is most likely because it's politically easiest, but it means your saved dollars will be worth a fraction of what they're worth today. A typical retiree who has $500,000 in a 401k invested in index funds may discover that in real purchasing power terms, this amount is worth the equivalent of $200,000 or $300,000 of today's money. If you're a business owner, monetary instability will create unique challenges. Long-term contracts will become risky. capital planning will become nearly impossible. You'll need to become a currency hedging expert just to operate your business. The smartest companies are already adapting. Tesla, Microsoft, and other large corporations already hold part of their reserves in Bitcoin and other alternative assets. They understood that keeping all reserves in dollars is a concentrated bet on the American monetary system, a bet that's becoming increasingly risky. The average person will feel this first in prices, not just official inflation and government numbers, but real inflation in essential products. Food, energy, housing, all basic necessities will become progressively more expensive in dollars. At the same time, dollar wages will struggle to keep up, creating a silent compression of middle-class living standards. Based on the principles we've discussed and the historical patterns we've observed, here are practical guidelines for navigating this environment. Don't keep 100% of your reserves in a single currency, not even in your home country's currency. The rule I use is 25% in precious metals, physical gold and silver, 25% in strong currencies from countries with fiscal discipline like the Swiss franc and Norwegian krone, 25% in productive assets that generate real income like real estate and stocks of companies with pricing power, and 25% in emerging technologies that can function as stores of value like Bitcoin, for example. This diversification isn't about maximizing returns, it's about minimizing total loss risk. Nominal assets are denominated in dollars. Bank accounts, government bonds, most corporate bonds, real assets maintain value independent of currency. Prime location real estate, stocks of companies with tangible assets, commodities, precious metals. When a currency loses value, nominal assets are destroyed, real assets adapt. For example, if you own ExxonMobil shares, you own oil wells, refineries, and energy reserves assets that maintain value independent of currency. If you own 30-year Treasury bonds at 3% interest, you own a promise to receive future dollars, a promise that may be worth much less in real purchasing power. In times of monetary instability, the ability to generate income independent of the traditional financial system becomes crucial. Develop skills that have value independent of currency. Create multiple income sources. Build business relationships that can function even in crisis scenarios. If you're a professional, consider geographically diversifying your clients. If you're a merchant, think about how your business would work in different monetary scenarios. Have cash money. Yes, still important for short-term emergencies. Have physical precious metals you can access quickly. Have assets that can be converted to money in different currencies. Liquidity in just one form, even if it's the best form, is a vulnerability. During the 2008 financial crisis, even sophisticated investors discovered that liquid assets can become illiquid overnight. The changes we're seeing are not short-term cycles. They're secular changes that can last decades. Your financial decisions today will affect not only your retirement, but what you'll leave your children. Build portfolios that can survive multiple monetary regimes, a strategy that worked very well in the last 40 years of declining interest rates may be completely inadequate for the next 40 years. The best protection against monetary changes is understanding how they work. Read about the transition from the gold standard to Bretton Woods. Study the collapse of the Bretton Woods system in the 1970s. Analyze how other countries dealt with monetary crisis. Historical knowledge is your best compass for navigating unknown territories. Silver's rally in 2025 wasn't an isolated event. It was the visible symptom of a historical transformation happening under our noses. When escalating geopolitical tensions, including recent demonstrations of military force in various regions, become necessary to maintain international arrangements. This indicates that systems based on economic consensus are being replaced by others based on military power. This is not sustainable. No empire in history has managed to maintain its reserve currency status through force for very long. The Soviet Union tried. It didn't work. The transition happening now is bigger than any election, bigger than any specific policy, bigger than any individual leader. It's the transition from the dollar-based monetary system to something new. We still don't know exactly what this something new will be. It could be a multipolar system with several reserve currencies. It could be a return to some kind of modified gold standard. It could be something completely new involving central bank digital currencies. What we know is that the transition has already begun. Silver is just warning us. The Chinese buying record gold are warning us. The dollar falling 11% in 6 months is warning us. The Fed being forced to choose between inflation and recession is warning us. The unsustainable math of American debt is warning us. The fact that silver lease rates jump 30 times above normal during stress periods in 2025 is warning us. The only question is, are you paying attention? In my experience observing cycles over time, I've learned that the market always knows before politicians. The market knew the Bretton Woods system was unsustainable years before Nixon admitted it. The market knew the 2008 housing bubble was unsustainable years before the collapse. The market knew Europe would need QE years before the ECB acted. And now the market is telling us through silver's price that the international monetary system, as we know it, is not sustainable. The question isn't whether there will be change. The question is whether you'll be prepared when it happens. The next few years will be defining for anyone who has wealth to protect. Those who understand the signals and position themselves appropriately will pass through the transition preserving and even increasing their real purchasing power. Those who ignore the warnings will discover too late that they blindly trusted a system that was coming to an end. The choice is yours. But remember, history doesn't forgive those who ignore its lessons. And silver, that humble metal most people don't even consider an investment, may be offering the most important lesson of our lives. The monetary system that sustained American prosperity for decades is changing. The only question is whether you'll change with it or be left behind. It's not a prediction. It's a logical consequence of forces already in motion. And if you observe carefully, you'll see that math never lies. Silver rose 144% in 2025, not because it became more valuable. It rose because what it's measured against the American dollar is losing credibility as a global store of value. And this is a trend that once started tends to accelerate until a new monetary order is established. History is being written now. Make sure you're on the right side of it.